before the short takes place, before the market comes back down. Similarly, right in here, cyan to yellow, weak. Now, let's look at the same time frame on our more sensitive chart. While at the top here, we were gold. On the next tick, it went from a +6 to a -2. Magenta is a -2. And so at that particular price, you see, there was weakness, and we see a corresponding move down. By the way, we didn't mention this at the beginning, but as you can see, we're charting on a 25 tick bar. The data that we're feeding to this 25 tick bar chart is coming from other charts. We run calculations on a separate group of charts and then feed that data to our trading screen, which shows up in this case with different colored bars based on what the calculations show us at the time. Now, incidentally, we expect that the market will drop even further here, and that's primarily because we know the VIX is going to move back up. The VIX had moved down from the low of the SPOOs. VIX had been moving up, then at 9:17 she began to move down, and so we got this corresponding move back up on the SPOOs. The VIX, if you haven't watched the VIX, we'll run a video one of these days on the VIX and how to interpret the VIX. If you go to our website, we have public information on how we interpret the VIX patterns. The VIX volatility index moves as in an inverse relation to the SPOOs, and then you can measure divergence based on certain rules. Go to our website and you'll find some public information on how to do that. It's a very good indicator. But as we've been tracking the VIX this morning, among other things, there is a huge gap on the VIX. Gaps are always filled, and that gap is above where the VIX is now. So that being the case, the VIX has to move up in order to fill that gap, and when it moves up to fill the gap, the SPOOs will move down. Let me see if I can pull that data over to the screen so you can see it. Let me pause for just a second. Okay, here's the VIX on the 7-tick bar, and so that gap that you see right in here, now that will get filled. There's only one way that's going to get filled, and that's for the VIX to move back up. So that will cause the SPOOs to move down. Let me rephrase that. I'm not saying that there's a causal relationship, that one causes the other, but as an indicator, being that the relationship is inverse. As the VIX moves up to fill the gap, we should see a corresponding move down in the SPOOs. Probably a move down sufficient enough to tie the low of the day, possibly even break it. Although I really think we need to, the VIX should move above the high of 25.36. That's where that was. This was 25.36. I fully expect the VIX will move higher than that. And so what we should be seeing is, again, a corresponding move down in the SPOOs to a new low for the day. However, I'm not going to say at this point in time that this move down that we've seen here in the last few minutes is over. We're not saying that at all. In fact, more than likely there's going to be a move up before there's a significant move down. We need to go back up and test those prices at around 72, 75, or 73. However, the VIX just moved up. It just moved up to close that gap. Sometimes it'll do that in just one bar. Now the question is, what direction is it going to go? That we don't always know. If it just moved up enough to close that gap without a corresponding move down in the SPOOs, it may take a little bit more of a move up before that begins to happen. Yeah, the VIX is again just beginning to move down again. So we'll come back to that. We'll show you once it's a little more clear as to what's happening. So we'll come back. Oh, we should mention here, green to dark cyan. What does that tell us? Strength. Green to dark cyan. A move up. Now we could probably trade that. And these, overall, our consensus is that the market is still short. But we've got a period right in here where the market is giving us a few